Hello, welcome to Chart TV for Thursday the 3rd of November 2005. Today we're going to look at a couple of markets and we're going to focus on moving averages. This is more as an educational piece. Right, here we have the S&P ASX 200, the XJO, in from the year 2000 to November 2000 to be exact, to the present day on the weekly chart. What I've brought up is the 20 period moving average. And why I've brought this up is because I want to show you how useful moving averages are at helping to identify trends and helping to pick setups. Moving averages serve a number of purposes. They can act as support and resistance, in that a market will often pull back and use a moving average support, as it has done here, and it has done here, and it has done here, and so on and so forth. And it can also act as resistance, as it has acted here, as it has acted here, as it has acted here, and so on and so forth. You get the point. And this is just with a 20 period exponential. You can play around with different time frames. A lot of people use 5 and 10, especially on intraday charts, 5 and 10 minute moving averages. 30 periods popular. The 20 period exponential is particularly popular, as 20 days is the pretty much number of days in a trading month. 30 period I like, 50 periods good, 180 and 200 periods as well. It differs from market to market, but as we can see here, the 20 period exponential on the weekly chart for the XJO has just worked a treat for the last few years. It has been brilliant, a really good indicator to use, and hopefully it will continue to do that. So another thing to look at with moving averages is that when price tends to get too far away from the moving average, it will tend to snap back and revert to the moving average, revert to the long-term mean. And we can see that how it's come down here in the downtrend and pulled back to retest the moving average, and then it pulled away from the moving average and snapped back, sort of like an elastic band. Once again, it pulled away from the moving average, snapped back, and we can see here every time that the price tends to get to be considered to be getting too far away from a moving average, it will snap back to it, like it did here. The price got a little too far away, snapped back. Price got a little too far away, snapped back. Price got a little too far away, snapped back. Price got a little too far away, snapped back. Price got, once again, a little too far away at the recent top, and what has it done? It has snapped back to retest it and use it as support, and that's what it looks to be doing at the moment. Okay, let's switch to the weekly and see what the sorry, not the weekly, the daily. See what the daily can tell us about recent price action in the XJO. We can see, okay, let's mark some levels in here first. Okay, let's start with a support at 4,300. Old resistance becomes new support. We've covered this before. Resistance at 4,400, which is broken and is now acting as, I guess, as a sort of support. So, and here's the next level of resistance, 4,500, which we have, I think I said about in the previous issue of Chart TV that I expected this market to have a crack at 4,500 within the next day or two. It has done it in 2 days. It's had a crack at 4,500. It has broken through to make a high at 4,520, and it looks to take a closer look at this bar. Okay, that's a bullish bar. It's an up day. Closed up. So it closed at 45.13. So it closed above 4,500. It closed above support. That's quite bullish. Interesting to note that the MACD has hooked up and it's starting to move back up now. So the MACD is rising. And we have, interestingly, the 20 period exponential. We've crossed up above it. Pulled back, retested it, used it as support, and we've crossed up above it. So this market is looking bullish at the moment. This market's looking bullish. Next level to look for is this resistance here at, I've got them high marked as about 45.90, so just under 4,600. And then the level above that would be the previous high of 46.79. So we may be looking to retest that soon. It's a bit hard to tell. I wouldn't expect the market to have a crack at that level right away, but we'll see how we go. I expect the market may pull back, consolidate these around these levels, and then have another crack. But I wouldn't be too surprised if we were looking to have a crack at that soonish. How soon? I can't tell at this stage. All I can tell is that in the short term, the market is in an uptrend. We're making a series of higher highs and higher lows. And we are above the 20 period moving average, and we have just cracked through support. How we may, I don't know, we may consolidate around these levels. It's a bit hard to tell at the moment, so I'll keep an eye on this one. Okay, let's have a quick update of the Nikkei. No, that's not the Nikkei. Nikkei. You may remember in a previous episode of Chart TV that I had the Nikkei in a long-term uptrend, short-term downtrend. This market just blows me away. That short-term downtrend appears to be over. It has broken the previous high and has now gone on to make a higher high. So the speed at which this market moves amazes me. And it's a little concerning because, as we can see, that this uptrend is accelerating rapidly. Okay, there's some pretty messy trend lines there, but I hope you get the idea. And once again, this market is 20 period exponential has proven very useful. It acted as support here. Market pulled back to retest it, bounced off it, pulled back to retest it, bounced off it, pulled back to retest it, went through it, reversed, big fat tail there, took off, bounced off it here, came close to it here, pulled back to it and rallied off it here, pulled back, sliced through it, made a big fat tail and has reversed and taken off again. And we are now above the 20 period moving average again. Okay, that's a bullish sign. MACD has hooked up and is moving up, another bullish sign. So all in all, this market is bullish. We have to zoom out to see where the next possible target for this is. Next target, I think okay, I can mark the next target in as here, possibly here, 14,000, which the high was 39.28. We're pretty much there already, so expecting some resistance to come into play. It's a lot, the 20 period exponential was a lot clearer on the weekly. We can see we're well above it there. Alright, and let's mark some levels in. This level here, low was 14,194, so 14,200, and 14,296, 14,300. So about to retest support at around the 14,000 to 14,200 level. Righty-ho, another one to watch. This has been an, oh look, here, hang on. You can see how in the downtrend, the moving average acted as resistance. Market got too far away, snaps back to it. Be careful with moving averages in range-bound or sideways markets because they will tend to give many false signals. If, for example, if you were trading this market and one of your rules was to go long on the crossing up of this 20-period moving average, you would have been possibly stopped out here when it crossed down through the moving average, and so you would have taken. Wouldn't have been a very was a very choppy market, not much fun to trade. And then, for example, here, if you went long on another crossing up of the moving average, the market didn't really go very far. And when it crossed down again, and you went short, yeah, just difficult to trade. You really got to watch. Moving averages in choppy markets tend to give many false signals, and they tend to have you whipsawing in and out of trades. It's not much fun. It's very sort of. I like nice trending moves like this, where like you can hop in, ride the trend, and just go for weeks to months. Nice big fat wide stop with the correct money management. That's how I tend to play it. That's how I like to play the markets. And you know, moving average can be great. Can help you get in and out of trades at the right time. And I'm just making lots of generalizations here and should just stop this.